Good morning, Paul Georgie from Allendale. It's March 20th, Wednesday morning, first day of spring in extremely cold weather here in northern Illinois. But markets have found some excitement, and we're higher in corn, soybeans, and wheat. Some short covering, I think, is probably the word that we have to use to describe what's happening in the soybean complex. However, corn and wheat continue to make new highs from the recent moves, so some positive news there. In the soybeans, talk of cancellations out of South America because of shipping delays. There's somewhere near 100 ships waiting to be loaded out of the major port in Brazil right now, up to 50 days delay. So certainly a reason for the Chinese cancellation, but again, it's being done by a group that, an investor group that resells it. So don't know how much final impact it might have. We are seeing Chinese markets higher overnight. That's providing some strength to the entire complex. We also, in the wheat, as we talk about short covering, the last CFTC report showed that the funds were extremely short the wheat complex, and we believe that there is some short covering there. Bean processors are talking about closing down or taking some repair time because of the struggle to get supplies of soybeans. That's driving meal prices higher here and supporting soybeans as well. As we go through the week, today we've got the weekly ethanol numbers. That's going to be watched very closely as far as demand and corn usage. We've seen some improving margins, so it's anticipated that we could see some higher numbers on the ethanol production side, so we'll be watching that here around 9:30. The dollar has dropped sharply here this morning on news out of Cyprus that they've worked out a deal causing the euro to strengthen, and that has reduced some of those fears and giving some underlying support and enthusiasm to the grain markets this morning as well. Tomorrow we've got weekly export sales, and then next week we've got the big prospective plantings, quarterly stocks that are going to be creating more volatility as we get closer to that time frame. In the cattle market, we had cash cattle trade at 124 to 124.5 yesterday in Nebraska. The cutout values continue to be weak. Choice down 166, select down 6. We've got that spread between choice and select down to like 60 cents right now, so not well, giving us an indication that we've got plenty of choice and market-ready cattle available right now, and we can't move the product. So that's a major concern there. Also, I believe we're seeing liquidation. What's also happening in the futures is we've got the bottom pickers coming in, trying to buy this thing, and then late in the session when the market doesn't rally, they go in and sell it again, and that drives it down to new lows. So it's a combination of margin liquidation and bulls or bottom pickers trying to be there, and yet they're not, so the market peels off here toward the end of the day. The pork complex cutout values there were down 114. The market is oversold in the livestock complex, but we're certainly not suggesting trying to pick a bottom, as this market seems to have no idea, no reason to rally at this time. So stay in touch with Allendale's research. Also want to remind everybody on March 26th, next week Tuesday, we've got our monthly Allendale Ag Leaders webinar, and we're going to be covering the USDA report and how it might come out and hopefully give you some information to get you positioned to go through that report. So you can sign up there just by going to our website. It's right on the home page. So we look to have everybody, as many as possible anyway, there. If you got any questions, don't hesitate to give me a call at 800-262-7538. We wish everybody a very successful trading day. I'll talk to you tomorrow morning. Thank you.